welcome to today's video blog. Today's a big day. We have our members coming in from the mentor program for the face-to-face meetup that we do once a month. Should be a good day. Basically, we're just going to catch up on all of the stuff that we've covered over the previous month to make sure that everybody's understands what we've covered so far, and we're all ready to and raring to go for the next month of the mentoring program. So we'll take you on our journey throughout the day as we meet all of the members and as we discuss what needs to be discussed. Other than that, it's been a pretty decent weekend. It's been relaxing, but the markets we're now in 2016 and we now need to really hit the ground running and get some trades back on the portfolio and really start to attack the markets and make some money. Okay, so the day has begun and now we have some people arriving into the office. I've just had a call and I think that somebody that's arrived just now, so bear with me and we will go and see some of our mentor members. Alan, how are you?
Alex, I'm a bit early.
How are you? Say hello to the camera.
Hello,
this is
Cameron.
Alan. It's one of our members, been with us for a while. Absolute legend, by the way. Yeah, so come in here. We've got one gentleman's already here and we've got another. We're just waiting for one more and then we can get started.
Hello, Louis.
How's it going?
I'm fine, thanks.
Yeah, good to see you. But just purely from the information you've gone through, in terms of the US, you're bullish on that, right? Your interpretation is you're quite happy to be long the market.
And basically, looking back in January January of this year, 2015, what you can't necessarily see here, but just looking up here, this is about January 2015. So we're starting to see a little bit of a divergence between the manufacturing and non-manufacturing. Okay, so what we could do there, all right, obviously we're bullish overall, but if we wanted to get a little bit of insurance for this, what we could potentially do is look for a long in services sector and go short something within manufacturing. Okay, so we just finished our first meetup session of the day. Very good session there. We had a lot to talk about. The members seem to be really enjoying the program, which is the most important thing. And I actually just had a really interesting conversation with one of them, which probably is something that a lot of people getting into trading should think about. And he's just talking about the fact that the program is, everything that he expected and more, and that he's looking forward to, in a month's time, he's going to be leaving his job and he's going to be doing this full time, and he's just looking to obviously do the portfolio management side of things as well as the DAX side of things to sort of build up the pocket money and all of that. And he said that he can quickly see himself getting into a situation where he's spending all day trading the DAX, and then in the evenings doing the portfolio side of things. And I said to him that's great and everything, as long as that's what you want to do. But remember that you came to trading, and a lot of you probably come to trading not necessarily looking for more money, because there's plenty of you out there I know that are on a very, very good wage packet. There's a lot of you on it in excess of 6 figures. So you're not necessarily coming to trading to make more money than you're making in your current day job, but you're coming to trading potentially looking for more in terms of freedom. So time to do what you want to do as opposed to being chained to the desk all day long. So just be careful when you're looking for a particular trading strategy or an approach to trading to make sure that it fits in with not only your monetary goals but your life goals as well, so your quality of life. You don't want to be trading all day long and then end up resenting trading in 6 months time, because yes, you're perhaps making as much as you were in your old day job, maybe you're making more, but from a time perspective maybe you're giving up more as well. Okay, so that's something that you definitely need to take into account. It's something that you need to consider when looking at the various different trading strategies that you might be looking at trading. So waiting for the next guys to come in. I thought maybe we'll try and get our little daily dose of Nikki in between time. So Nikki, sir, how are you?
I'm good.
How do you think the session's going so far?
Yeah, I thought it went really well, to be fair.
You guys are picking up all of the information that we're giving them. They're enjoying it, which is the main thing there.
And they see value in it as well, which is good.
Yeah, definitely. So what do we have on our agenda for today other than the mentoring program?
The ISM manufacturing PMI report is out, 3 o'clock today.
Are we expecting anything there?
Well, I'm just waiting to see. Last month it came in below 50, which is a pretty bad sign for the US economy. I'm looking just to see if it bounces back above or improves a little bit. And yeah, really, they're going to dig into the report, see if there's any trade ideas in specific industries that can add to the watch list.
And that will obviously help us form a view on what we're going to do generally in terms of our portfolio in the next 6 to 12 months time. So are we going to want to be significantly more hedged and obviously pay premium for some of the trades that we get into, but obviously then hedge out the market risk, because if we are going into a recession, no one wants to be left holding the baby if you're just completely net long on everything else.
You were saying that as a theme to concentrate on actually in the coming year was one of the themes that will drive the UK and the pound as something we were considering as well, because obviously you have the fundamentals, so then the currency market is very theme based as well, so certain themes come into the market that override fundamentals, and you have to take that into consideration as well.
But you would say the themes would be obviously the Brexit fears.
Oh, absolutely.
ECB and Chinese QE.
Yep.
And what happens with the US economy.
Yeah, absolutely. I mean, the US economy is an interesting one at the moment. I mean,
it's a presidential year for them.
Yeah.
And normally because those presidential years are normally very, very good because the advertising spending is so high, and it's in the interest of the party in power, Democrats, to keep the economy doing relatively well.
Sure, no, I completely agree. But then something as powerful as an economist, I mean, as a trader, we use information in a certain way. As an economist, do you place much reliance on stuff like the ISM reports, manufacturing, obviously as a leading indicator?
Yeah.
So as it dropped below 50 last month, obviously at the moment it's a one-off, we'll see what happens today. But that's a pretty strong indication of fragility in the US market. Although I think the consumer's doing okay, the data says it's okay, housing market's okay as well. So that's why I think from a trader's perspective, you have to take an investment decision to be hedged at this point. A retail trader might interpret the data in the same way, but do something different, like maybe be long outright the market and the housing market, I don't know, whatever they'll decide to do.
But the problem is also if you look at the consumer in the UK or in the US, what's strange is they have a lot more power, or a lot more. They seem better off now because obviously there are real wage increases coming through.
Sure.
There are the housing market's done very well.
Absolutely, and it still looks like there's room to go. If you look at the building permits, for example, it's breaking out to like new highs, which is quite positive for this cycle, not for obviously historic.
Well, it's coming up to 7 p.m. now, and our day with some of our mentees, our mentor students, has now come to an end. It's been quite a tiring day, obviously, because I started early this morning. When I come into the office, as you know from my previous webinar, I started sort of 5 o'clock in the morning. It was no different this morning, and today I'm still at the office at 7 o'clock. I won't be going back tonight. I've actually taken I've got a hotel just around the corner here, because I thought I've got to be back again tomorrow morning, which, at a similar sort of time. So by the time I got home this evening after doing the day with the mentor students, and then we've got a webinar this evening in an hour's time, basically I'd just get home just to go to sleep and come back again really, really early. So I sort of thought that it's probably a better idea to hang around in London, enjoy the lights and everything, and then obviously get a good night's sleep and be able to wake up refreshed for tomorrow morning's sessions. we aren't retail traders. We're teaching you how to be professional traders here, where basically you're looking at things from a global perspective, okay? And then once you've got all of that, you're then drilling down and you're looking at, so you're going from a top-down approach, okay? So rather than being one of those people where you're looking for entries on one specific chart because that's your favorite instrument to trade, you're being a bit more sophisticated about things and you're taking a top-down approach to the markets. So the day has now come to an end. I'm just heading back to the hotel. As mentioned earlier, I'm hanging out in London for this evening because we had a full day of face-to-face meetups with the mentor program, and then obviously the webinar that's just finished. It's just coming up to 10 o'clock. It's been a long day. I hope you've enjoyed watching, and I look forward to speaking to you on the very next video blog. So take care now, and thanks for watching.